After weeks of heavy volatility, gold is entering a wait-and-see mode. Investors are holding back ahead of today's U.S. jobs report, a key event that could determine whether the Federal Reserve raises interest rates again or pauses its tightening cycle. The June Nonfarm Payrolls report is expected to provide fresh insight into the strength of the U.S. labor market. A stronger-than-expected reading would reinforce expectations of tighter monetary policy, while weaker employment data could improve the outlook for gold. Recent comments from Federal Reserve officials suggest policymakers remain committed to controlling inflation. Markets are now pricing in at least one additional rate hike this year, limiting demand for non-yielding assets such as gold. Although gold has rebounded slightly from below the $4,000 level, the recovery remains fragile. The metal recently recorded its worst quarterly performance in 13 years, highlighting how cautious investors remain. While energy prices have eased from recent highs, investors remain concerned that inflation could stay above the Federal Reserve's target. Persistent inflation would make it more difficult for policymakers to ease monetary policy, creating another headwind for gold. If today's jobs report surprises the market, expect significant volatility across gold, the US dollar, and Treasury yields. A weak labor report could lift gold sharply, while stronger employment figures may trigger another wave of selling.